Hello, this is Huskins, the Forex Mentor. Welcome to another wonderful day in the markets. We made an awesome 25 to 40 pips. I'll tell you more about that in a little bit. The happiest people do not have the best of everything, they make the best of everything they have. Now, our results, like I mentioned, that we've had the UK retail sales, and we um, made about 25 to 40 pips depending on the pair. Now, uh, let me just pull up the chart really quick and I'll tell you what happened. This is okay. So, our trade was that we go short from this candle in on the euro GBP after 5 minutes after the news. It goes about 7 pips against us and then very well in our favor. So at least 25-30 pips in our favor if we took the euro GBP. If we instead took the GBP USD, because we could have had this trade in either of Euro GBP or GBP USD. What we do is we'd be buying the GBP USD right from this particular price out here, the 5 minute, after 5 minute, and it goes about 5-7 pips against you, and based on this you would have easily made 40 pips without any problem. So the interesting part about this trade is that there was very little pain, less than 5-6 pips of pain, and only gain after that. So even if you started moving a stop loss to protect your profit, you wouldn't have got stopped out. Let's say after 20 pips you would move your stop loss to break even, it did not come back down. After 30 pips you move it to 10 pips, it did not come down, and you would easily make your targets. So then the results for the UK initial jobless claims. Now, this is a very important video to watch because it clarifies the entry and why we stayed away from this particular trade again this week. Now, again, had we taken, gone according to the new trade plan we made, this trade plan was slightly revised because we haven't been getting an entry for the last three times. I and Rick have decided to change the entry and tweak it a little bit so that we could take advantage of the price movements. So on this new plan we would have made money, but we were trading based on the old plan, so basically it's a no trade. So our total trades taken are 39 and 32 are winners. All right. So let's talk about what happened in the markets all over the world. UK retail sales of March 2013. Basically, in March, the quantity bought in the retail sector or sales volume decreased by 0.5%. This follows strong year-on-year growth of 2.5% in February. So this is expected. You go strong and then you ease off a little bit. Right, Quarter 1 2013 does, however, show an increase of 0.4% compared to quarter of 2012. So the the retail sector is decent. The largest contribution to the year-on-year decrease came from the non-food sector. Now, this is not something which is nice, because we know that the food sector is not very elastic. When we look at retail sales, we want to see whether the retail sales decline is from elastic products or unelastic products. Elastic products mean that a little price change and it will drop significantly. So since the food sector is the most inelastic sector in an economy, the largest contribution to the year-on-year decrease came from the non-food sector. That means that people are now looking for bargain hunting. All right, so the major indexes are adding to yesterday's sizable losses. Now, the blue chips are holding up better than the small caps. Now, let's check the Dow. Okay, so this is the Dow. This is today, uh, this is today during the during the day. This is after 5 o'clock, so we're not going to be considering this candle. So this candle is what we got to be looking at. So we had losses yesterday, and we had losses today, and it closed at close to 14,501. And uh, what does it mean in the long term? Long term, currently, the way I'm just going to show you what people are looking at. People are looking at this trend line, one, and people are looking at this trend line. So now, one of the way the trend line players like to play it is that it has broken through this trend line, and now it might go and try to test the broken trend line, and if it goes up, this becomes a new significant low. If it does not go up, the next price they'll be looking to meet with is about out here at this particular trend line. This is what the trend line players look at. I'm not a very technical trader, so I just like to know what the markets are looking at. I do not make my investment decisions based on technical analysis. Now, no earnings misses this morning, but some key economic numbers came in worse than expected. First time unemployment claims up to 352,000. Mid Atlantic manufacturing barely growing. Now, this is according to the Philly Fed survey. Then, leading indicators. Now, this was down after 3 months of gain. Now, let us understand the reason behind the euro whacking yesterday. First, let me pull up the euro chart. If you see, euro yesterday had a whacking, and I wasn't plugged into the market enough to understand why this might have happened. I tried to do my research and draw my conclusions. So it all it took was the head of Germany's central bank suggesting that European Central Bank may, underline this word, may cut interest rates if new information warrants the move. Now notice how he's hedged, may, not will. So, but that didn't stop the markets from taking the euro to the woodshed. So, just a little thing from the European Central Bank, or sorry, from the German's central bank, suggesting what the ECB might do, caused euro to fall yesterday. Now, in other world news, we have the IMF warns another phase of financial crisis possible. Now, this is very important. Look at the entire structure. We are weaving a story right now. What is the story being weaved? The International Monetary Fund is concerned about the possibility of another phase of global financial crisis if regulatory reforms remain unfinished. While major UK and core Euro area banks have been actively de-risking and deleveraging, more needs to be done to complete the repair of the balance sheet, according to IMF's Global Financial Stability Report. France's president refuses to enact tougher austerity measures. Now, this is again, in continuation to our discussion yesterday, the IMF cites austerity in reducing growth forecast. Plus, we even mentioned about a study which used which was used to justify the austerity is now called into question. And now look at the headlines which are forming that now France is refusing to enact tougher austerity measures. So perhaps that's where the entire geopolitical consensus is going. But what they like to do is they like to weave the press, and though the press is seemingly independent, the kind of news which you start hearing, we can start, weaving our expectations of what's going to happen. So, in short, France, USA, other countries are not going to go that tough on austerity. That means that they're not going to have their deficit reduction as much as they had earlier cited that they would have needed to. Now, this is a very interesting story. Naked CDS bans fuel funding, bank funding fears. First of all, I'm not too sure whether you understand what CDS is. Now, CDS basically means credit default swaps. Now, what the hell is credit default swaps? Now, basically, CDS means that think of it as insurance. That a particular debt instrument will not pay up. Let me give you an example. Let us say that I am a company and I have a bond. What is a bond? That I have taken money from the market, and people have loaned me money, and I've promised to repay that loan back. Now, if my bank has my bond, all right, or let's say a major player has my bond, but is now worried that I might go bankrupt, or my credit worthiness has gone down. What he'd do is he would sell the CDS. So he would um, uh, the way it works is that you would sell the insurance, or sell the CDS would mean buy the insurance on my credit. So in case I do not pay up, they will get money from the person who sells them, or who buys the CDS. So if I have not made myself clear on what the CDS is, and if you want me to give you an elaborate discussion on what CDS is, just shoot me an email and I'll incorporate that in my next video. But anyhow, basically bets on naked sovereign CDS were banned. What does that mean? That means that if you did not own sovereign debt meaning the sovereign bonds of different countries, let's say Germany or France or Italy, you were not permitted to sell CDS on that. So you were not permitted to buy insurance on that. In short, what it meant that you cannot bet that a particular country is going to collapse, because that would create a lot of instability in the environment. What happened was that since naked sovereign credit default swaps were banned, one of the unintended consequences has been negative bets against major financial institutions. So what it's that, okay, I cannot bet any longer that Greece is going to get bankrupt or Cyprus is going to get bankrupt, but I can now bet whether a particular bank in Cyprus, a particular bank in Greece is going to get bankrupt. So based on that particular assertion, um, if there is a lot of bet going on that a particular bank gets is going to get bankrupt, the borrowing cost for that bank tends to increase, and this is something which may lead to another financial crisis, because if the banks cannot borrow at a low rate, they'd not be able to lend out at a very low rate, and which can create some crisis. So in short, the take-home message is that there have been unintended consequences of naked CDS bans, which is basically insurance that particular country is going to go bankrupt. And this is very important because this could be brewing of a next financial crisis, and then you heard about that here first. Now let's look at preview for tomorrow. As seen on the members only section, we have the Canadian core CPI at 8:30, which is again a green trade. So let's recap. Today we had a 40 pip winner on the UK retail sales. We had a no trade out here, and we'll have a potential trade tomorrow. So let's hope for a trading success, and shoot me an email if you want me to concentrate on a particular sector or anything which you would like to hear, or me to share my ideas with y'all. Thank you so much. Have a wonderful day.